What's up, guys? I'm Brandon, also known as Picasso FX. I'm gonna be going over today my first 10K trade, and I'm gonna be breaking that down top down. It's a great accomplishment for me. I've been trading for around 5 years. Let's get into the video. So we're gonna start on the daily chart because I think it's very, very important. And ICT has always talked about how the higher time frame gives context, the lower time frame gives precision. Always remember that. On this time frame, we were looking for price to trade down into this volume imbalance right here. On a daily chart, I was looking at all week. In my Discord, I had alerted them on Sunday that I believe that this is where price would draw down to after hitting a monthly rejection block and weekly rejection block. This trade up into here was hitting a consequent encroachment of a weekly wick as well as a monthly wick. So I just want to highlight these higher time frame arrays. So then we go to lower time frame, it's gonna make a little bit more sense to you guys. When you understand the range of what you're trading in, and that's the high to low, it gives you the ability to understand where premium and where discount is. And so when you know those things, you're able to trade honestly both ways. And that's what I was able to do. Even though I was looking for lower prices, I was able to take a buy up to a premium, and that was all I needed. Where's the current dealing range that we're in? So where's premium? Up here. So if I'm looking to sell, I have to sell up in this area. So between these areas right here, this is where I have to sell. So this is the area, this is a premium. Down below here is discount. So what do I see to the left? Well, I see a high, a low, lower high. So what's that? A mitigation block. Mitigation blocks are my favorite things right now. Like that is my go-to setup right now. So extend it out, mitigation block. So if I'm looking to sell, price needs to be up here first, but currently we're down here. So what does that tell me? If I see a setup that works in a framework, I'm allowed to take this trade up to there if that's what I'm looking for. If it presents itself, I'm allowed to take the trade. So now we're going to go down to the 5-minute chart, and I'll give you some sauce in this video. I wasn't going to, but I'll give you some sauce. Price is right here right now, and there's an inverse fair value gap here. So let's note that. Inverse fair value gap here. We'll just do anything box, right? So if I'm looking for up here, how can I frame something to go up a little bit higher? Now, what I said in my Discord is that if price trades into the daily volume imbalance before 9:30, then I have to take a little bit different approach. And that's exactly what I did on this trade. We're just going to play the next candle. So right now, this is 925. This is the 930 candle. So the 930 candle, we had traded down and hit this level, which was fine. Perfect. Okay. So once that happens, my mind immediately now goes up to this is where the range that is going to trade within, between this high, and now it becomes this low. So now my range of trading up to, if I'm going to go to a premium, is going to be, this is the first buy side liquidity, and then this is the mitigation block on the 15-minute chart. So when I saw this on the 1-minute chart, we traded down here. This is now the new range. We hit the daily volume imbalance, have shown expansion, consolidation. This is manipulation here inside of this range, and we're going to come up to here. Ultimately, in the higher time frame, this is a retracement, right? That's what it is. So price trades up. We put the next candle. So there we go. And it creates a breaker block. High, low, higher high. Extend this out in time. I'm going to note that breaker block. So what I did was I put my entry here. I had 3, but we're going to just put 1. That's fine. I had my entry there. I bought as it traded down into this. My stop loss was below here. Sell stop. And then my buy limit was honestly up here, and I moved it down. So this is buy side liquidity here. Look at the consolidation right there. On a lower time frame, you'll probably see a market maker buy model. And so this was the buy side liquidity that was targeting. On a 15-minute chart, there was a volume imbalance here. Sorry, you already see it kind of happen, but it is what it is. So we have the volume imbalance on the 15-minute chart. Back to the 1-minute chart. So this is where my setup was here. Volume imbalance was there. I actually ended up moving it down here, which is fine. Because again, how high is it going to go into a discount or into a premium? That I don't always know. So I'm okay with taking some partials off at a specific level. So for me, my first partial, let's put on 2 here just so you can see exactly what I did. So we had 2, I had 3 on the original trade, but I just want to make sure that we know that what happened. So I eventually moved it down here, but you can see there's clear buy side right there. So when price ran above this high, I took off 1 partial. this up here. So price I took off one partial right there. We're gonna watch the next candle form. So next candle goes down. I was in. It traded a little bit deeper, and then that was my immediate reaction there. Took a partial off there, and then I ultimately closed, and I moved my stop loss up here. I closed all the trade pretty much right here before it even got there, and it was fine. I was okay with everything. Price went all the way up to the buy side liquidity pool, came down, then you'll see it go back up and target the buy side liquidity pool there, and then consolidates and then trades lower. Why did I feel confident trading up into that? Because I understood what the dealing range was. When I understood we were in a discount and we have to go up to a premium to sell, I was comfortable taking this breaker block up to there, and that was all I needed. Like, even though higher time frame, I was looking for lower. When my setup occurred and I had confidence after hitting a higher time frame array and understanding where we could trade up to, that was my first 10K trade. It was amazing. And I'm just gonna give you some sauce right here that I understood on this exact trade. So we're gonna look at this, right? ICT talks about immediate rebalance. We're gonna take everything else off. You're gonna see some sauce. I just wanna go back and not, let me just go to the next candle. I don't want all these markers on here. There we go. Okay. So I'm gonna give you some sauce right here, some ICT sauce. ICT has talked about this, but I don't think a lot of people have noticed this. Just my personal opinion, but we're gonna do this. So immediate rebalance. What is an immediate rebalance? Immediate rebalance is when you have one candle, the next candle trades above it, and then the third candle comes back down to the high, and then you're expecting price to run away. Well, why did I have confidence in this? In my streams, I talk about immediate rebalances a lot. And the thing that I had noticed is when you see an immediate rebalance on a lower time frame, it's always gonna be trading down to a fair value gap. What I didn't understand until about a couple of days ago was that it's trading to an OTE on a lower time frame. That's all it's doing. And you're gonna see how amazing and how cool this is when I show this to you. Remember I said it's always an OTE on a lower time frame when you see immediate rebalance. Always. Let's go to a 1 minute chart. So what do we see here? This is the 5 minute. Let's make sure we have that outline. Immediate rebalance on the 5 minute chart, right? Higher time frame, context, lower time frame, precision. Always remember that. So what do we have here? Breaker block, extend it out in time, immediate rebalance, and then don't forget about this, right? This was the 5 minute inverse fair value gap that I was talking about the whole time. So IFVG, let's do M5, right? This is the IFVG M5 time frame. And so what are you seeing here? Now, this is a stop run. ICT has taught this before. This is a stop run. So this is the original low, the high. What do you want to buy? Discount there. What is there? Fair value gap. There's a reclaim gap. There's an inverse fair value gap. There's so much going on down here, right? So much going on there with confluence, and with higher time frame, the draw is going to be up there. So anytime you see a immediate rebalance, go on to a lower time frame, and you're going to find this. It may not be a breaker setup. It may just be a mitigation block, but you're going to find an OTE setup every single time. That's something that I discovered when I recently looked at this. I was like, wow, that's what that was. And I found it on this trade, like this exact trade. I was like, it's just trading to OTE. And I always knew there was a fair value gap, but I didn't make the connection that it was trading OTE. So if you find that range, bang. And honestly, if you look at the rest of the day, it did exactly what we were looking for and ended up tearing down to this daily volume imbalance and ended up going a little bit lower, but that's fine. I was able to pick this out, and if I didn't want to take this, this was what I was looking for. So looking for there down to some London lows with my MOR RAID model, which is so OP. This was my first 10K trade, and you can see it was a pretty nice trade. And I'm really happy with the process that I went through, how I was able to go top down, higher time frame down to lower time frame, and pick my shot and take it. If you enjoy this type of content, subscribe to my YouTube channel. You can follow me on Instagram at I am Brandon Polk, and you can always watch me live stream on YouTube every day at 9:20 a.m. EST. Hope you guys have an amazing day. Hope you guys have an amazing weekend, and I'll catch you guys on the next stream. Peace out.